to get these types of results, like you do need to concentrate your trades and you do need to kind of marrying up your concentration and what the market environment is. I think the mindset and the psychology of trading is so important. Stop looking at really small time frames. Stocks make big moves in the morning, like everyone's after them for the first 15, 20 minutes, but then things kind of calm down. Psychologically, you're kind of thinking about this, you're like, oh shoot, like I should have sold it or sell it now. The market overreacts on earnings. It gives you an opportunity to kind of catch that. Don't try to make money too quickly. Obviously, you'll have big wins, but it's not about making like a ton of money. It's about getting consistent, have confidence in your skills and ability, think positive, follow your process and not your account balance.
Hey everyone, welcome back to the TraderLion podcast. I'm your host, Richard Moglen. This episode is brought to you by the Ultimate Trading Guide, a free online resource that is perfect for building your foundation for trading. You can pick up your free copy down below in the description. Join me today for this excellent episode is Deepak Uppal, who is a top performer in the U.S. Investing Championship with a return of over 250% this last year. Really looking forward to diving deep into his strategies, his process, his routines. He's prepared an excellent presentation, and we're going to cover a lot of trades from this past year. Deepak, thank you so much for joining us today, and really looking forward to this.
Yeah, thanks. Thanks for having me. Looking forward to it as well.
Yeah, perfect. And to set the stage, as always, I like to kind of hear about how people first got interested in the markets. So would you mind kind of talking through, how you first got started with investing and trading?
Sure. Yeah. It goes back a ways. I started trading when I got out of college. I got my MBA. And as soon as I started working, I kind of got the bug. One of my good friends, his dad, we used to go see him when we were in college, and we'd go to his house and he'd have CNBC rolling and, talk about stocks with him a little bit. And that was kind of the start of where I think I got my bug for trading. And so as soon as I graduated, was working, had some money, I could invest in the market. I went and opened up a brokerage account and started my long journey of trading. So it's been lots of ups and downs, but I still remember. I think my first trade was stock I bought was Starbucks because I used to love drinking Starbucks coffee, and that's kind of where it was when I started.
And how long have you been doing this?
So that's probably been since the early 90s, probably 91 or so. I started trading. And so, obviously it's been a long journey and lots of ups and downs. And, I think, I'll share as much as I can in terms of my, what I went through and kind of what helped me and what didn't help me out.
Yeah, and if you had to kind of describe your personal trading style now, what would you kind of say, and what were kind of the steps and process to actually develop that style, since the 90s?
Yeah, I mean, I think I'm much more of a swing trader. I'll buy and I'll hold for a few days to maybe a couple weeks, a month at the most. That would be considered a real long trade for me. And so, I typically avoid day trading, but I'd say I'm more of a swing trader. And a lot of that, I think, is just based on my personality. I just don't have the patience to sit around and buy a stock and, wait for a year or 2 years. And, that's just something that took me time to kind of figure out what attracted me and what made sense for me.
Yeah, and how did you kind of come to the current style, and where did you kind of go to learn and to develop as a trader?
Yeah, I mean, I think like I said, I've been trading for a long time, and I think in the '90s, you've probably heard all the stories about the go-go '90s, the dot-com era. I lived through that. You'd buy a stock in the morning at like $5, and it'd be 60 by the end of the week, $70, and I took a real nice small account that I had back then, maybe $25,000, $30,000, and I turned it close to $1 million by the time the bubble burst. And being a novice and young and not knowing what I was doing, and not really having studied, right, and just kind of trading just to trade, not knowing what I was doing, I watched most of those gains kind of go away real quick in March of 2000. So in a way, it was very, very painful. I mean, you wanted to sit there and puke because it was just like disgusting of how much money you lost every day. But looking back at it, I mean, it was probably a good lesson. I was young. I was still, able to make a lot of money. It's not like I was retired and had no more money and I had to go back to work, right? So in a way, I look back at that as kind of a great learning lesson. And I think as the years went on, I kind of didn't trade for a while, just because I was shell shocked with all the losses. And it took me a couple of years to go back into the market, and once again went in, did okay. As the market started to improve, I started to make a little bit of money back. And then you had the housing crisis, the bank financial crisis in 2007, 2008, and that once again hit my account.
Mm.
And as I went through that again, I didn't trade for a while, and then I went back in the market probably in 2010, and I decided that if I'm gonna be a trader and I'm gonna trade my money, and I got to learn how to do it. And it's just not acceptable for me to like be handling money and not knowing what I'm doing. Otherwise, I can give it to someone else, right? So that was kind of the start of my real kind of journey on trading and trying to figure out, what is trading, how do you do it, and what's the right way to do it. The other thing also I was doing was I was looking back is that I was trading everything, right? I was trading options, I was trading stocks, I tried to trade currencies for a while, and put my hand into everything, and that was just a big mistake, right? And I was holding long term, short term. I was trading, metals, all sorts of things. I really didn't have a focus. And so um, moving forward, starting in 2010, 2011, I read the first book I read was Making Money in Stocks by William O'Neill. And I thought that was great. It kind of helped start putting things into perspective for me in terms of what you need to look for. I went to some of his seminars that were here in Chicago, and learned a lot from that. Read IBD every day when it was delivered every day as a physical paper, and that was kind of the start of it. I did that for several years, 3 years probably, and then I came across Stock Market Mentor with Dan Fitzpatrick, and I joined his service and learned a lot around technical analysis from him. Went to some of his webinar or seminars that he used to do, and that was a great start, I think, for me. From there, I also started to follow Dan Zanger with his chartpattern.com, and learned a lot about kind of his style of trading, which was good, and it kind of helped me in terms of trying to select the types of stocks I use. But then I think the real game changer was when I came across Mark Minervini, these books. That was the first thing I did was I read all his books, and I was like, he really helped me, I think, kind of put my whole thought process together around, how should you be trading, and the focus and the discipline, and not try to do everything, options and stocks and crypto and everything, so I just kind of started to focus in on, just trading stocks. I had lost a lot of money trading options.
Mm.
And so, I haven't traded options probably in 6, 7 years, 8 years. And so that was kind of a good first step for me. But anyways, I read Mark's books, I joined his platform. And in 2018, I went to his master trader program. And I still remember in that session, I guess he always asks this question. It was my first one, and he said, for everyone in here, there were probably like 300-400 people in there. He said, raise your hands if you guys think you can do triple digit return in the next 6 months. And I just intuitively just rose my hand and said, yeah, that's why I'm here, right? Like if I can't figure this out, then why am I here? So I just raised my hand, and I still remember that day. It was like, for the you folks that didn't raise your hand, you'll never do it. And the 4 people that raised their hands, you guys have a chance at doing it. And so that kind of was just an interesting thought that's always stuck in my mind, is that if you don't believe in it, believe in yourself, like it's never going to happen. And so, dream big, and shoot high. And even if you don't make your goal, you'll be better off than probably if you didn't think that you were going to be able to do that. So anyway, so that was kind of where I think some of my trading success started to come from.
Yeah, I love that story because I think that's a little bit of why I love doing these interviews, right? Because I get to talk to people who have done it. The audience gets to see people who have, put a lot of the strategies and methodologies that they learned from books or whatever into practice, put in the work, and actually gone out and performed and shown, you know, that it's real. It's not just some market wizard in a book who can do it. You yourself, if you put in the work, can make it happen. So I love that story. You mentioned a few mistakes that you made in your past, trading options, focusing on, everything. Were there any other key mistakes that you were making, during the previous trading times, the 90s, 2000s, that when you really cut those out and made a specific effort to get away from that, that really kind of turned the corner in terms of your performance?
Yeah, I mean, there's the list is probably huge on that. So I would say a few things. One is, I really didn't know what I was looking for, right? Like it sounded good, I'm going to buy it and see what happens, kind of thing, right? That was like a big mistake. Not using stops was a big mistake.
Yep.
Not understanding the market environment that I was in and just still trading like it was, 1999 still, right? Like everything's going to go up. Not managing the size of my positions. Um, what else? I mean, looking back, not really looking at technicals as much. Well, I was looking at technicals, but I didn't really understand them. I
Right.
mean, everyone looks, oh yeah, I see this chart. Like, yeah, this looks like a cup and handle, but you really don't know what a cup and handle should look like. Not knowing the rules around that, so lots of things like that um, that really kind of were impacting my trading. And like I said, I think I never saw like a good something that was put together in such a good way that kind of like just for me it kind of like
Click.
made sense, and until I read Mark's books. I think he just packaged all his kind of style and strategy and everything together into something that for me lit a light bulb, and so that's kind of what helped me out, right?
Yeah, perfect. And how much of you would say, obviously, you're more of a swing trader, so it's not quite the CANSLIM strategy that you first read and how to make money in stocks. I'm sure it's influenced by it, but how much of your process would you say is technical based versus fundamental based? At this point in terms of how you trade.
Yeah, so I'd say like 80% is probably technical.
Hmm.
I do use IBD and Market Smith, and I try to avoid stocks where or yeah, companies that don't have earnings. And that's been kind of something that I've really focused in on. Like I'm not really trading a lot of these small caps that are losing money. And I'll kind of go through a little bit about like my criteria. It's evolved over the past, I'd say 3, 4 years in terms of really what I like to focus on and where I've seen myself make money and get those triple digit returns. I mean, I've had them 2 years, 3 years now, not in a row, but over the past three, out of 5, 6 years, probably 3 years where I've made triple digit. And they all had something in common in terms of the types of stocks I was looking at. So,
Right.
and it just goes with the approach that I use. It just makes more sense for me to focus on stocks that are companies that are making money. I just feel a little more comfortable with that.
Yeah, and I always like to kind of hear a little bit of context about why people decide to join the USIC. So I'd love to hear kind of the backstory behind that, and whether it's something about competing against others, competing for yourself, making sure you're more disciplined. What made you actually decide to join the contest?
Yeah, so I was working full time. I've been working full time for 30 odd years, and so last year I decided to stop working and start trading full time. And so as part of that, one of the things I decided to do is, hey, I'm going to put my skills up against all these other traders and see how it goes and see how I perform, and it kind of gives me some accountability to myself, right? Because
Right.
that's the other thing in trading, I think, is like no one really knows what you're doing except yourself, right? I mean, unless you're trading on a hedge fund or some sort of fund and there's people looking at it, but you need to have accountability, and so that was the one way that I thought I could do that. So that's one of the reasons I joined. And the other reason was, like I said, I've been trading for so long and I've been studying this stuff for since 2010. diligently. And I was like, I always feel like you need to learn more, and you do, but I was kind of like, I know a lot, and I mean, how much more am I going to learn? Yeah, there's probably areas I need to focus on and fix a little bit, but and tweak. But I've got 80% of the knowledge I probably need to trade, and I need to have confidence in that knowledge and just go after it. And
Right.
so that was the other reason I did it, was just to kind of test myself out and say, hey, look, this. You're probably as good as a lot of the other folks that are out there, and hopefully I can finish at a decent spot and prove to myself that I've kind of learned a lot, and I'm capable of doing this full time.
Yeah, well, obviously you ended up being a top performer, which is excellent. And I'm curious, for the audience as well, what were you doing professionally before you completely switched to trading, and what has that transition kind of been like? Because I'm sure a lot of people, that's the ultimate goal. Many of them are probably doing this part time, working on their skills, improving. What was that transition like to become a full time trader, and how
Yeah, I
did you
mean,
ultimately decide to do so? Yeah.
yeah, I mean, like it's like when you're going to college, you're like, oh, I got to get a job, got to get a job. As soon as you get your job, you're like, oh my God, how do I get out of this and do something else that I really want to do? And so, for a long time, I was always thinking like, hey, how am I going to, what am I going to do that I really am passionate about and live off of that, right? And so I tried all sorts of things as I was, working, like I opened up a furniture store for several years. And that was also a great experience that I reflect back on. And I realized, what? Like people are like, I want to open up my own business. And for me, I opened it up. I ran it for 7 years part time as I was working full time. And having a business and running a business is like, I hats off to everyone that does that. It is one of the hardest things in the world to do. And you work hard, and I'm not sure if the payoff is always there at the end of the day. And it's, you've heard how many businesses survive once they open. It's very small. But I look back at that and I was like, okay, that was kind of something that I reflect back on, saying, okay, having my own business after I'm done working is probably not something for me. The other thing that I also try to do is I thought, let me get into real estate. And, that sounds like something I'm passionate about and interested in. But, after I looked at that, I invested in some real estate opportunities, if you will, and, lost money on them during the 2007, 2008 debacle, the financial crisis. And then I kind of just sat back and I said, hey, you know what? The best way to do this is what you love doing, which is trading. And, you don't have to worry about anything. You control your money. If you need to sell, you can sell in seconds, not months or weeks or anything like that, right? And so I was like, probably in 2008, 9, 10, something like that, I decided like this is what really I need to focus on, because this is like what I love doing, and this is something I can continue to do while learn while I'm working. And it's going to take a lot of well, it takes a lot of time, but it's not going to take a lot of no, I don't want to say effort either, but like, money and all that other stuff to do it. Though it does take money as well. Anyway, so I started doing this, and, my wife always says, like, you were so passionate about this that every day I would spend an hour, 2 hours after work, studying, reading, looking at charts, and, for like 10 years, right? And
Hmm.
so that's kind of what got me there. And then I was just at a point in my life, where I was just like, okay, I'm done working, and I can do this. And obviously, while you're working, like my job, I was in sales. I had the flexibility to watch the markets and to trade on, especially like with the phones and everything like that, right? I didn't have to be in front of my laptop all the time. And so that's kind of what helped me get to the point where I was confident enough to say, you know what, I'm going to make this transition, because I was watching the markets anyways during the day on my cell phone. And so the transition's been, I think the hardest part of the transition has been not having the social interaction with other people, which I loved
It's a
at work,
solo
right?
endeavor. Yeah, it's trading is a
Yeah.
solo
So
endeavor.
like I'm sitting in my office every day, with my laptop, my screen, it's just me, right? Whereas when I was in sales, you're meeting with clients, you're flying around, you're going places, you're talking to your team, et cetera, which all, that was I think, the biggest challenge for me.
Yeah, and for anybody who's close to making that transition, were there any key things that you thought about that you need kind of tick off before you decide, okay, I'm able to do this, whether it's performance related, overall size of your portfolio? What were some kind of considerations that you took into account when deciding to go full time?
Yeah, I mean, I think it was all those things that you mentioned, right? I mean, I think all along I was like, hey, I need to have a certain amount of money available as kind of a backstop, if you will, and try it out for a year at least. And so, getting your portfolio to the right size where you can make enough money to continue to make that salary and continue to live kind of the life you want to live. And then B, I think the other thing was having the confidence in yourself to say, you know what, I know what I'm doing here, so I can do this and just go at it, right?
Right.
And so that's kind of those were the two things really that I think got me to the point where I was like, okay, I'm ready to do this now.
Perfect. So now let's go ahead and dive deeper into 2023 trading in the USIC. And I know you prepared some excellent slides on your process and routines. So yeah, feel free to take it away.
Sure. All right, here we go. So I always get asked a question. I was at Mark Minervini's gala, and everyone, always wanted to know what my stats were, and so I figured I'd start off with that. So here are the stats for last year for me for the competition. Batting average was 50. Average gain was 3.25%. Average loss was 2.3. I had a 1.41 win-loss ratio. And as you can see, my whole time, like I mentioned earlier, I'm a pretty quick trader. 6 days on average was my average hold time for gains, and 2 days for losses. And I did about 152 trades in total. And when I say trades, it's round trips.
Mhm.
And so within those 152 trades, each trade could have been like 8, 9, 10, 12 legs or something like that, right? So it just varies for each of those trades. But on average, I did about 152, or a total of 152 trades. And on the right hand side, you can see kind of my equity curve over the course of the year. I ended up with about 260% return at the end of the year, and it's much higher than I had expected. I always start the year out, kind of putting a 100% goal out there to try to get to 100% at a minimum. And so I was definitely pleased with where I ended up.
Yeah, no, fantastic performance. Yeah, obviously it speaks for itself. I definitely have a few questions related to your stats that we can go over in just a second, but just looking at your chart, your equity curve, which by the way, thanks for putting this out there. It looks like, from September, you entered a little bit of a drawdown to end out the year. How is that kind of mentally, obviously being in the competition, your results are out there. How is that kind of overall experience for you?
Yeah, I'll tell you this. I think the mindset and the psychology of trading is so important. And I know there's more and more being written around it. But, to me, like this was it was really interesting because if I look at my equity curve for my other portfolio, I have a few portfolios that I manage. And so if you look at my equity curve for the other portfolios, that draft during this time is really it kind of goes the other way. It kind of, I did well during this time period in my other portfolios. It was in this account particularly that I had this drawdown. It's really weird because if you were following at all the results last year, I think I started to really, I was doing okay. I was doing decent. I was in top 10, from January through probably the end of April. And then in May through like the end of August, I think I was in first place every month. And then the September results came out, and I think I was like in second, and I think Gordon was like, had some ridiculous amount of return compared to where I was, and then all of a sudden I felt the pressure, like, oh my God, I have to, what am I going to do to catch him, right? And
Right.
you kind of get into this pressing yourself to try to get some gains and make money. And I started to do things. I started to get a little sloppy, and just those things that are in your mind, like, hey, I can't let this go down. I can't let I got to make money. And so you start thinking about the account balance versus your process, and that's kind of what you're seeing there is my psychology during that time frame. And it was really interesting for me to see that because, like I said, on my other accounts that weren't part of the competition, I actually did pretty well. Um, but I kind of tried to shake it off at the end of November, and had a decent December. But good pickup there on the downdraft on the equity curve. Also, I think during August, September, October was also kind of a tough time in the market as well. So anything I was trying to press and trying to get some return out of, I was losing money. So it was a lot of paper cuts, some big stabs as well along the way, which I'll talk about as we go through the charts.
Yeah, I mean, obviously drawdowns, every trader experiences drawdown, every few months or every year at least. Uh, and it's something completely normal. People love talking about the awesome performances, but you know, that this is the reality of trading is they're gonna have great months and then you're gonna have pullbacks just like a normal stock. Were there any kind of personal reflections from this drawdown that you took away, or just in general, anything when you're in a drawdown that you tried to do to kind of get back on the right track?
Yeah, I mean, I think for me, the biggest thing was to stop focusing on my balance and kind of my percent gain, and to go back to the stocks and to the setups and to the what the price was doing versus worrying about my account balance
Right.
and the competition. And so um, that was my biggest takeaway from this, and also just in general as well is like you know, stop looking at like really small time frames. Um, when once you enter a trade, look, you got to zoom out. I use a lot of shorter time frames as well as I'm watching the stock and how it acts. But especially during this time frame where I was kind of pressing a little bit, I needed to just zoom back out onto the daily or weekly, and because the stocks weren't doing anything wrong, I was just getting antsy and jumping out of stocks prematurely when they didn't do anything wrong.
Yeah, excellent. And forgive me, and you can answer this later if you do address it, but I'd love to hear what on average your position sizing is like, how many stocks you usually have in a portfolio at one time, because obviously some people see, average gain of 3.25%. On a smaller position, a 5% position, that doesn't, you need a lot of those trades to make a difference. But if you're sizing larger, that can have a bigger impact. So what in general is kind of your process for position sizing?
Yeah, I'm going to talk a little bit more about it, but I can kind of talk at a high level here is that, typically what I've seen to get your these types of results, like you do need to concentrate your trades, and you do need to position sizing wise, the max number of stocks I'll have is like 3 to 4, probably, maybe
Hmm.
5. But 3 to 4 is probably the max I'll have in an account. And within that account, like that's going to be a big size. It could be like one of those is like 80% of my account, and the other three are, because I use a lot of margin. I use margin. I kind of consider margin as part of my account balance,
Hmm.
and so I've learned how to use margin by losing a lot on margin in the past, especially in 2000. And so I've kind of figured out how to use it in my trading. And so it's just part of my account balance, and what I have available is the way I think of it. So I might be 80% in one account in one, or I might have 2 or 3 trades that are like, because you can go up to 4 times margin. Um, I may have, 2 trades that are 200 and 200. So it just depends. A lot of this, though, when I do use it like that, it's got to be in the right market environment. And so, kind of marrying up your concentration and what the market environment is, I think is real important. And that's where I think that was like one of the big learnings that I had was that, I was always just going in on margin all the time, even if we were in a bear market, right? So I learned that fairly quickly over the past few years to not do that.
Yeah, and obviously looking at your average loss, 2.3%, you know how to manage your risk in a way that you can use that leverage. So I just always want to remind people, watching this, if you can't control your risk, you don't really have any business using leverage like that, or taking huge concentrated positions. But obviously you can manage your risk very, very tightly.
Yeah, the other thing I want to just point out is that the percentages look really small, and they are. But that's kind of not, I'm not trying to get like the big, 15, 20, 30. Obviously I would love that. But what I really look at in my accounts is and I don't look at percentages, I look at dollars.
Hmm.
And so when I have an account, say if it's like, say it's $100,000 account, I'll risk, on that like a percent and a half of my account value is what I'm willing to risk on it because, and the types of stocks I buy, a 2, 3% move on that stock is a lot of dollars. It
Yep.
equates to a lot of dollars. So if you've got a lot of shares and you got a lot of dollars coming in, dollar wise, you're making a lot of money. Percent wise, it doesn't look like a lot, but that's kind of the way I think about it. And that's kind of how I trade.
Yeah, and being a swing trader with those kind of hold times, you're focused on turnover too, just the next trade, the next move to capitalize on.
Exactly. Exactly. And that's something that, it's taken me a little bit of time to kind of figure out what, I think a lot of people like, and I'll get into this, but like wanting to really get that big gain on every stock, like, hey, I want to make 30% on this, 50%, I want 100 back, 100 points on this, 100% return on this stock. But I think, and maybe it was in Mark's books or something I've read that, the percentages as you try to go for the bigger gain, the percentage of times that can happen in a stock starts to go down pretty quickly. And so if you want to make 5% on a stock, probably like 80% of stocks you can make 5%, right? Without too much problem. And so that's kind of the way I think about it now. Is like, I'm like, there's enough stocks out there I could go in and make 5%, 4%, 3%, whatever it is, and have a good enough size that's a pretty good return and a pretty good way to make money without
Yeah,
having to stress about trying to get a 40, 30% return on a on one stock.
yeah, for sure. And I didn't have any other follow-ups on this, so feel free to carry on unless you had more to add.
No, no. So I think if you look at this kind of equity curve, what I did was I went back and I looked at the Qs, and I kind of I mean, it's a similar sort of equity curve, but I wanted to talk a little bit about, where in the year did I really make a lot of my money? And if you look at this, the orange boxes are kind of where I was very, very aggressive and using a lot of margin and all that. The red box is where I was kind of a little bit more cautious because the market was in a downtrend. And the places where there is no box, I was probably trading. I was still trading here during this time, but this was like during that SVB uh,
The
issues
banking.
and all that. I mean,
Yeah.
I was trading really small. I was getting, just kind of chopped up. Didn't really make any progress, but that was this time frame. I didn't do much. During this time frame, I was actually out of the market 100% across all my accounts. I was actually in Europe on vacation for a month, so I didn't do any trading. I came back and I did do a little trading here. I'll talk a little bit about that, and then talk about some of the losses I had. These stock tickers underneath are some of the ones I'll just kind of walk through as we get into it. But um, yeah, I mean, if you look at it, typically, I think your equity curve will follow pretty closely with what the market is doing. And so I think you do need to make sure you know what the market is doing and kind of where we are in the market cycle to really understand how aggressive you should be getting. One of the things that I do like a lot is that Mark Minervini, he does his weekend updates. If you guys are members, you would know this, but one of the things he does talk about is market cycles, and he doesn't use them to trade, but it kind of gives you a roadmap, if you will, of what you could potentially expect. And I've found that to be very useful, like especially if you look at it from a presidential cycle or from just kind of a overall 10-year cycle, you start looking at these and you start to get an idea of what typically happens during these time periods and these years. And that kind of just gives you not a roadmap, but it kind of gives you kind of just an idea of what you could potentially expect and how aggressive maybe you could be. But at the end of the day, I think you got to look at what the current market is doing.
And how do you kind of define a market cycle for yourself? Does it kind of start when we get above a moving average or what individual stocks are doing? How do you kind of analyze the market for yourself and determine, okay, we're in an uptrend, we're in a downtrend. I should be aggressive here. I should be more defensive.
Yeah, I mean, I look at the charts, right? Like, I mean, the cues, I'll draw some lines. You can probably see a bunch of lines on here anyways, but, you can kind of just start drawing lines and trend lines and seeing kind of where the market is. And you get a feel. You also get a feel for just, as you're trading, like if you're buying some stuff and things are just moving or breaking out and they're continuing to break out and not coming back in, I mean, you kind of feel like, okay, things are working, I'm making money. Let's just press it a little bit here and keep
Mhm.
going.
Yeah, excellent.
So that's kind of the way I look at it. I've got some other indicators that I look at every day as well that kind of gives me a little bit more of a maybe a little bit more of a shorter term idea of kind of where the market is and what's going on. So I'll go through those as well, some of those indicators that I use every day to kind of just get a feel for the market, if we're overbought in the short term or if we're oversold, and kind of when things could potentially change direction.
Yeah, great. And coming into this year, obviously we were coming out of a longer term downtrend, bear market, whatever you want to call it. Did that kind of affect your mindset at all, during the beginning of this year? How did you plan to approach 2023, I guess, entering the contest and looking to perform?
Yeah, I mean, I think probably towards the end of 2022, I started to get a little bit more bullish just because I think I don't remember, I think it was the Fed was saying like, hey, we're kind of done with the interest rate hikes. They came out with something in October of that year, I think in 22, towards the end of it. And that you kind of saw the market change a little bit there in terms of what it was doing. And I think after like Christmas or something, the market started to really kind of solidify and start to change character from
Mhm.
what it had been doing all of 22. And so that kind of set it up. And then I just started to look for stocks, and stocks started to do well in January. And I was in pretty hefty, strong in January and had a great return. And then, February was a little bit tougher last year. And so you could see the little bit of a drawdown in my account here, as you can, if you look at it, yeah, like right here, like, you saw it come down, but, and then we got into the SVB stuff. And then, as we got into March, April, April, May, like you could just see these, it was like kind of the mega caps started to really act well,
Mhm.
and they started to set up, and those are the ones that were moving. So that's kind of where I had a lot of focus last year.
Yeah, and coming out of that period at the beginning of the year and also coming into November of this year, um, coming out of a correction, do you have kind of a standard game plan of, how you'll test positions, whether you go to, immediate full size right away, or if you kind of have to build some cushion, build some confidence that the trends kind of changed again and we're starting a new short-term uptrend?
Yeah, one of the things I do a lot is I'll use when the market is just kind of like stocks aren't really don't know if they're working or not. Like what I'll do is I'll use a lot of the ETFs
Hmm.
to kind of test the waters, if you will.
Hmm.
So like I'll buy the T triple Qs, and I'll kind of see what they do. And if I start seeing those start to perform, because I think having the individual risk, I don't want to have that individual stock risk. At least I'm kind of cushioned with the Qs, or any other ETF that you want, that kind of, if you want to follow the Russell, or whatever it is, you can buy whatever you want. But that's kind of what I do. Like even right now, the Russell looks like it's about to go. I mean, it had a pretty decent day today, coming in, but I'll start to like I'll buy using the ETF first
Hmm.
and kind of get a feel for what's going on there. If I start seeing traction on that, I'll probably sell it and then start looking at stocks, or start looking for stocks and then get out of the ETF and go into the stocks quickly.
Yeah, great. And was there anything else here that you want to reflect on looking back at kind of the overall move of the Qs this past year?
Yeah, I mean, it was a great move, right? I mean, but if you were really aggressive here, you could have been trying to buy. But even though the market went up here, like if you look at the Qs, they went up. we really didn't get a lot of stock traction during this time. At least
Right.
I didn't. And so it's interesting to see that just because the Qs are going up doesn't mean the stocks will necessarily go up. So, I mean, I was getting chopped around here. I think it was more base building that was going on here than anything else. And so you did see a lot of chop during this time, even though on the Qs it looks like it was like, a nice move up. But in my mind, the market really got going in earnest like in May, end of April, early May, and that's really when it took off until like the middle of July. And then you had that little, that nice 3 month kind of pullback or correction or digestion of this big move that we had in the first half of the year. So that was interesting. I also kind of found, this pullback kind of to be a very interesting pullback when you look at it, right? I mean, undercut, you can't see it on this, but it did undercut this downtrend line here, and then it undercut it here before it really just kind of took off here in November. So I like to use these trend lines quite a bit to kind of just see what's going on with the either with the stock or even with the with the index.
Great.
So one of the things that I wanted to this was one of the things that I think took me a long time to get to, which was what kind of a trader am I and what kind of style do I have? Like I said earlier, I was trading all over the map. I didn't really have a style and I didn't really have a strategy. And I don't know if there's so much information out there sometimes, like especially now with X and with all these services and social media and people bombarding you the news and all that. You're like this was like just something so basic, like I didn't even think about it. And once I started to kind of come up with my strategy, I was like, wow, I should have known this like years ago. And so hopefully this helps people out to kind of figure out like what is your trading style and strategy, or what is it that you want to do? Do you want to be a long-term investor, investing for months and years, kind of like a Warren Buffett, if you will, buy value, hold it, and then sell it. You want to be like a Stan Weinstein, who buys trending. Once the trend changes, he starts to buy it and just holds it and watches it go up. Those are great options. Or you can be a trader. You can be a day trader, right? Which takes a particular type of skill and mindset. Or you can be a swing trader, which is kind of what I am. But I think one of the big things is you got to have it match your personality. Which I when I started trading, like, and started going to some of these services, I tried to mimic each of these folks, like, you know, try to figure out their trading style and try to match it and do the same. And what I realized was I kept doing things different, even though I was like, well, this guy doesn't do it this way. He does it this way. He holds it, or whatever. Or he doesn't look at it at the 5 minute or 30 minute chart, right? And I was like, well, and it took me a while to say, you know what? I just can't be someone else, right? So like I got to figure out my own style of trading. I can use what their methods are and their approaches and leverage those, but I got to figure out my own style and I got to figure out my own way of doing it, because if you're just following their buys and sells and just buying it like that, like you're basically getting fed. You're not really learning to fish, right?
Right.
And so my whole goal was I need to learn to fish and do this on my own, because who knows, these guys might not be in service, they might not be doing the service or whatever, right? And you really do want to learn what they're seeing and what they're doing, and then figure out your own approach for what works for you. You might be a full-time, you might be a doctor and you're in surgery all the time and you can't sit there and look at stocks, right? So your strategy might be very different, right? You might be a value investor or trend investor where you buy it and you look at it every night or something, or every week, and that's it, right? You don't have time for it. So it really comes down to your circumstances, but also your personality, I think. And so for me, the swing trading, fits very well with what with my personality and with what I enjoy doing. Like I don't mind sitting here and watching tickers all day long. It's just me.
Mm-hmm.
So that's it on this. I don't know if you have any questions on that.
No, I just completely agree, and you kind of have to figure out what fits yourself, and also the time constraints that you have. Like you said, if you're a doctor, you can't really be a day trader. It kind of, it's not compatible. So yeah, I completely agree.
Yep. So with that, as I kind of thought through a lot of this, right, I was kind of like, we can, only control really three aspects of trading. It's figuring out what stock you want to buy, and then you buy it, when to buy it, how much to buy, and then when you sell it, and how much to sell, right? You can sell it all, you can sell it in pieces, etc. So those are the three things we really control once, in terms of what we do around trading. And then the last thing I think that is real important that I never used to do, which was also kind of a lesson learned, if you will, was analyzing the results. Um, and so to me, that was like a big aha moment for me as well, was analyzing my results, which I never did. I never tracked my trades. I never looked back and see what I did right, what I did wrong. I never looked at my year-end results, if you will, from my brokerage account. Um, so those are some things that really kind of I think are important as we talk about trading and figuring out how to trade correctly.
Yeah, and for people out there who don't really do much post analysis, what have you kind of started doing, or what do you do regularly to make sure you're learning from your mistakes, all of that, to just try to improve over time?
Yeah, I mean, I think, doing the post, I always heard about like people, oh yeah, do post analysis. It's a lot of work though. You got to go back, pull up your trades, put it in, chart it, blah blah blah. It takes time. It's not fun. Sometimes what you see is not fun. But I think what you do is like when I started doing it, I started to see the same common mistakes, buying and no, just buying randomly somewhere where there was no support, there was no trend, there's nothing, right? Like just buying it and holding it, and then it comes shooting down. And you start seeing these common things that you're doing over and over and over. And you're like, oh, wow, I didn't realize I was doing that, right? And so, it uncovers the problem if you're having problems. Um, the second thing was that I thought was important was that, you know, not just to analyze the stock, but then to also analyze like where you were buying it, but also where you were selling it, right? Like that makes a big difference. One of the things that I did, and just since we're on this topic, is like when you talk about analyze results, one of the things I did, I was reading actually, I was reading this somewhere, but I downloaded, I think it was one of Mark's books, like, download all your, what would happen if you cut all your stops or your losses at 8%? Like, what does it
Hmm.
look like? So after I read that, I went and downloaded a year's worth of trades that I had in one of my accounts. And I went through it and I had lost money that year, right? Like I was down, I don't remember how much, but like some 15% or something like that. I went through, I downloaded all the trades and I put an 8% stop loss on all those trades. And if I would have put and not changed anything else, like leave every other positive trade the way it was, and just anything over 8%, chop it. And the result was amazing. I would have made like 50% that year had I done that. And so that was like one of the biggest aha moments I've ever had. And so I would recommend folks that if you've never done that, it's really eye-opening when you start looking at the numbers and the dollars and cents that you lost just because of whatever, putting in stop loss is not easy, and it's always painful for traders for some reason. At least it was for me. But when you start looking at the numbers and the dollars that you lost by not doing it, it is just like mind-boggling why you wouldn't do it.
Did you, after that experiment, did you focus a lot more on cutting your downside? Was that kind of a key change in your trading?
Yeah, because I think what I saw was that I was making money. Like,
Hmm.
I was on my winning trades, I was making money, but the problem was I was losing it all on the other side by not having stops and risk management.
Right.
And so if I could figure out how to do that, and you know what, I still struggle with it today, right? Like it's like you've got the FOMO, you don't want to miss out on the upside, you get banged, you get banged out, and then you're like, oh geez, I should have stayed in, and the stock turns around and goes up. But I think I've tried lots of different things to kind of overcome um, that mental gap, I guess, if you will, or ability to do that. And so, it's always a work in progress for me, but definitely I'm way better at it than I was a few years ago.
Yeah. So is trading. It's always a work in progress. There's always things we can work on, all of that. But yeah, I
Yeah,
think
and I
this slide
track it now.
summarizes it well. Yeah.
Yeah, I mean, I track it like I've got a certain dollar amount. If I lose more than that, I track the number of trades that I went over on that, and go back and analyze them and take a look at why. And a lot of times it's because I bought it at the wrong spot. I bought it and it was too large of a stop to put on it, so you lose it. You lose too much, and so stuff happens, right? Like, I mean, we're all human, but to try to take that down to the least common amount that you can do, like, that's kind of my goal.
Yeah. Excellent. Anything else on this slide that you wanted to emphasize?
No, I think it's pretty basic.
Yeah. Great.
So what I wanted to talk about a little bit about is like stock selection. I think this is kind of gets a lot of talk out there in terms of how do you go about selecting stocks, what kind of scans do you run, things like that. And so I think over the last 3 or 4 years, I've kind of narrowed down kind of how my criteria for picking stocks, right? So my criteria are, and a lot of this is like from the Minervini books and how to make money in stocks. But I look for stocks in uptrends, strong relative strength, 85 plus. Uh, I look for prices or stocks that are only 75 or more. So like I generally avoid trading anything less than $75. Um, and the reason is that I find that stocks that are less than that, for my style, what I'm trying to do is I'm trying to get dollar moves on a stock. And so stocks that are higher priced obviously are going to be able to move a lot more in terms of dollars than something that's not. Um, Industry groups, I've really narrowed it down. I really focus only on tech, semis, retail, and then leveraged ETFs. I use those quite a bit in my trading. I avoid all other asset classes: metals, energy, financials, biotechs. And the reason is that I used to trade, like I said, I used to trade all this stuff, right? Like, and what I find is that when you start getting into metals or into energy, it's kind of like trading almost like Bitcoin, right? Like, so if you buy like uh, Coinbase, because it's a lot of it's tied to the price of Bitcoin, right? Or if you look at metals, it's tied to the price of gold or silver or whatever else, copper, or energy, the price of oil. And so now you got to not just be correct on the company you're buying, but you also have to be correct on the direction of that underlying commodity. And so now you're just kind of reducing the percent chance of you being right, because now you got to coordinate two different things, right? You got to buy the right company that deals in that commodity, and the commodity has to move in your direction. So I've just and those trades, like, yeah, they may be good for like a few months, but then they're kind of gone. Like, they don't last, and you don't really get the big moves like you do in like a tech or even in retail or anything like that. So I avoid those asset classes for that reason. Biotechs, I just they're very good movers, but once again, most of them have no earnings, and they're very volatile, and they're basically news-driven events. And so I don't trade any biotechs. If I'm interested in biotechs, like I am now, I've been trading some biotechs, but I do it through the ETFs and not through individual stocks. And I've just never had success trading biotech, so I just avoid it.
Mm-hmm.
The other thing is I look for stocks with high ATRs, typically 5 or more. Otherwise, I probably won't be trading it, at least not with any size. And then I focus, like I mentioned earlier, focus on companies that have positive earnings. And I try to keep my stock list very manageable to 20 to 25 stocks, probably on average, at any given time. Because I just find, like, I used to have these watch lists that were like, 100 stocks. And I was like, I never even look at, 70% of these stocks. And I would never even buy those stocks like that are on the list, right? And so I just kind of figured, like, I just knock them all out and just keep it very, very small, which has helped me a lot, because now I can really focus in on those stocks. And Honestly, like I scan like once a week.
Hmm.
But I probably, my list doesn't change all that much because a lot of these stocks, like they'll go through their phases of uptrends and then they'll digest. But out of that 30, there'll be some other, handful of stocks that are just breaking out, right, or coming out of a consolidation or a pullback. And so you've got the opportunity to kind of just stick with some very limited number of stocks that are manageable that have good ATR. I just kind of hone in on those, and that's kind of it. Try to keep it simple.
And how would you define stocks and uptrends? Are you looking for above a certain moving average, or yeah, what's your requirement there for being in an uptrend?
Yeah, so like I mean, I want to see the 200-day in an uptrend. I want to see the 50 over that. I mean, ideally, I'd love to see, the 50 has to be over the 200
Hmm.
is a criteria, and they need to be in a decent uptrend, like at least for a month or two. And then, the 21 day, I look at that, but I'm not as concerned about that. If it's in an uptrend, I mean, if the 200 and the 20 or 50 are moving up, then I'm usually pretty good with that.
And do you pay attention at all to overall like liquidity, like dollar volume? The price over $75 probably, fulfills most of that. But I was wondering if you have any restriction for, average volume traded or anything like that.
Yeah, like I usually won't trade anything less than like 150,000 shares traded on
Hmm.
average. Like, it's usually above that. And so for the type of stocks, and we can kind of look at some of my focus stocks that I have on, that I'm looking at right now. Most of them really don't have any liquidity issues. So, but I would never trade like a stock that only trades like, 75,000 shares a day or something like that.
Yeah, too thin, too thin.
And then just in terms of tools that I use, I mean, I use MarketSmith, which I think is great. Not just from a technical perspective, but also, like I said, if I'm looking, when I do look at stuff, I look at earnings, how much short position there might be in the stock, how many funds have it, but mostly earnings and sales are kind of what I'm looking at. Are those moving up? What percentage change is it, et cetera. So that's what I look for. Um, I read IBD, and then I use TC2000 as my charting software.
Yeah, excellent. Anything else when it comes to stock selection that you just want to emphasize here? Or I mean, you've covered a lot of great stuff with these bullets.
Not really. I mean, out of this 20 to 25, 30 stocks that I have, usually, I'll kick some stuff out and I'll bring some stuff back in. But the other reason I like to keep these stocks like kind of limited
Hmm.
is I find that each stock kind of has its own personality of how it trades. And for me to go in and put in size on something that I've never traded before kind of scares me a little bit. I just feel like you don't understand the stock. Like it might be a stock that you know goes up huge in the morning and then corrects down during the day, and but then closes on the high. And if it's the first time I'm trading that and I buy a big size on it, like I might just freak out and sell it or something, right? So I like to kind of have a smaller list that I've been watching for a little bit so I can kind of get a feel for how it trades overall. You look at SMCI, right? Super micro, that thing's wild, right? Like it'll move a lot up and down all the time. So it's good to know that so that you don't go like I wouldn't want to go in there and do one of my typical, you know, big concentrated positions when it can drop, 100 points in a day, right? So
Right.
it's good to know that before you kind of get into some of these stocks. So that's the other reason I like to keep my stock list kind of limited and smaller, just because I can, as you watch it every day and see what it does, you kind of get a feel for how it moves and how much volatility there is in it, especially, when you're looking at high ATR type of stocks.
Yeah, for sure. All right, perfect. I don't think I had anything else on stock selection.
Cool. So buying stocks, the patterns that I typically like to look at are cup and handle, pullbacks. I do a lot of post earning plays as well,
Hmm.
which I find to be pretty can be very lucrative, and I'll kind of go through a few of those. I look for bull flags, and then also just consolidations of a chart of price, right, along a horizontal consolidation that might be taking place. And so those are the ones that I typically kind of focus on. I don't really focus on a lot of like trying to find the bottom of a downtrending stock or something like that. So these are all, your typical kind of high percentage, I think, plays, except for maybe the post earnings ones. But we'll talk through that as well. And then, like I said earlier, is that I really look at market environment. Like I think that it's real important to marry up what the market is doing overall with your trading and how aggressive you want to be, right? And so one of the things I do is I've got like this little sheet that I fill out every day in the mornings before the market opens. I look at some key things. I look at the VIX, what's the VIX at? I look at put call ratio, stocks over the 200, bull bear sentiment, CNN, the greed index. I look at that all the time. I look at the IBD market trend. And then with some of these uh, services that I have, they've got some proprietary indicators. So I look at those, and between these things, like I kind of just get a feel for, especially this doesn't help me like when the market's just in a good trend, but it helps you when things are overbought or oversold. And that's kind of where this thing really kind of helps out in terms of figuring out, what kind of trading or trades that, I want to put on overall.
Yeah, and are there any key values that you want to point out when it comes to any of these indicators that you kind of serve as a reference point, both either to the overbought or overall side, oversold side of
Yeah,
the
like
equation?
Yeah, like I mean, like the bull bear index, I think is, a lot of this is from like IBD. That's from IBD, right? Like when it gets over, I think it was like 60 or something like that. It's kind of like be careful. A little bit too much enthusiasm and greed, but you know, it shows it on in IBD every day. The put call ratio is something also that I look at, which is kind of like, if it's over 1.1, like especially if we're going down in the market and it's like pulling back, like once it gets to like one over one, 1.2 is like really high, then you kind of know that, hey, we might be getting close to a short term bottom where you may want to take a chance on buying some, like for me, in that sort of situation, I would buy some ETFs, right? Like to kind of just test the market and try to make some money. Um, or with the VIX, the VIX varies. It's obviously super low, so it's kind of just you got to just pull up the VIX chart and kind of see where it is relative to where it's been over the last few weeks. I mean, I think it's so low right now. Like anything over, you know, probably 15 or 20 would be like we'd feel the pain right now. Whereas in the past, right, like if it was like a 20, it'd be like, okay, VIX has come down. It's kind of nice. So that one varies. But in general, those are the ones that I really kind of really look at.
Great.
The other thing is market themes. Like every market has a theme, and one of the things is like I like to follow those themes. Like I don't need to go anywhere else. Like I'm not one of those people that's like, like last year everyone was like, oh, the Mag 7 or the mega caps are just driving the market, and people are looking for other ideas. And I just couldn't understand it. I was like, the money's pouring into these. Like, why look anywhere else? Like, just go with these. It's like it's the easiest. You got 7 stocks or 8 stocks. Just buy those and keep buying them and selling them and watch them move up, right? And so the market themes, I think, goes a long way. And that's something that I think I've learned is that don't try to veer too far away from the market themes. Don't try to find anything else. Like, just if it's making money, just stick with it. Like, why try to create something new when there's nothing there? The other thing is, like I mentioned, is when I buy, if it's a good environment, I'm going to buy very concentrated and heavily margined in my account to try to get those gains. And like I said, I look at everything based on dollars versus percentages.
And what kind of points you towards the market themes in a typical year? Obviously, it might be a little bit different depending on what the theme is, but what do you look for to say, hey, there's a theme in this industry group that I should focus in on. That's where I should, focus my attention.
Well, I mean, I think you kind of see it in what stocks are moving, right? When you go through like IBD, for example, you go through that and you look at kind of what are the industries, they've got them ranked every week in the paper, right? First, second, third, whatever. And you can just see like, okay, this is kind of where money's flowing or has been flowing, and those are the kind of the areas that I go after. And you know what, as you read the paper and you kind of just hear what folks are saying, right, you kind of pick up those themes, right? Like right now it's, semis, AI is like the big theme, and so look for stocks that are moving up based off of the AI theme. And I think that theme is going to last for a while. Obviously, it needs to pull back and correct a little bit. It's moved very fast and very high, but you never know with this stuff. Like it can just keep going, right? So keep riding it and keep going at it, and just manage your risk accordingly so that you don't get burned when the music stops and the pullback happens. So, you know, I think the themes are, if you just pay attention, you can kind of figure out what those are, right? Like a few years ago, it was like the housing theme was huge, or in 2022, it was all energy, right?
Mm-hmm.
Energy was doing well, and that was the theme back for 22. And so at that point, I really didn't trade it because I don't like trading that stuff. So I just kind of just sat around and waited for the market to turn and things to change.
Yeah, great. And coming back to the concentrated position sizing, and feel free to leave it to a later slide if you discuss it there, but do you buy all at once, or do you add to position to build up to a very concentrated position? Because I think that's a question that a lot of people have about people who, trade, high percentage of their account. How are they managing risk going into that name as they position that way?
Yeah, I mean, typically what I do is like I'll buy the stock, and a lot of people say I'll buy like a small starter position, but for me, kind of like what I feel is that if you buy a starter position that has no, like, it's not really going to add any value to your account, like why buy it? Like I'm going to buy something that's substantial enough where it can make an impact to my account,
Mhm.
but not substantial enough where I can, get killed. So I'll buy something, and I'll try to buy it as close to a particular danger zone, and buy enough of it, have a good enough risk management stop on it, put the stop in. And if it starts to move, like it can start to move in 5 minutes, and I'll just like go, it starts going, I'll just buy a lot more
Mhm.
and go all in, and then adjust my stop again, and see kind of how it plays out. But typically I'm buying something where I'm expecting it to turn around or break out or do something, right? So that's kind of how I do it. The other thing I also do is like if I buy something, and sometimes I try to buy a little early, and it doesn't always work out well, but I'll also put in a lot of buy stops at the proper breakout point so that I can just, not, if I happen to miss it because I'm not watching it, it'll execute, and then I'll be in. So I've been using a lot more buy stops, and they seem, especially right now when breakouts are working. I mean, it's a good strategy to use. I've never really used it a lot in the past, but I've just started using it a little bit more over the last several months, and it seems to be a decent approach and works well for me.
Yeah, so to kind of create an example, if you're trying to put on an 80% position on a stock that's near a pivot, near a breakout, how would you kind of go about it? Would that first buy be maybe a 20% position, and then very quickly you'll add on that other 60% if it starts pushing towards that pivot and actually breaking out?
Yep. Yeah, exactly. Like I'll buy like 20, 25%. So, that's a decent size so that if it does move and I don't buy any more, I'm going to get a decent return on it.
Hmm.
Um, and I can put the stop, hopefully, small enough that it's not that big of a dollar loss relative to my account. And then if it gets going and the market's doing well, and, things look like they're moving, then I'll buy, the rest of my position right away. Like I don't wait around. I think one of the things that I used to do in the past was I didn't trust what was going on in the market, and I'd like question it and double think about things. And then by the time, like, it was like, yeah, it's the right thing to do. Like the stock
It's
was
gone.
up so much,
Yeah.
it's gone. And then I'm like, oh shoot, I got FOMO. Then I buy it. And then like, I don't really have a good place to put my stop, right? And then I don't put a stop, and then the stock just comes crumbling down, and I lose on my winning position that I originally bought, right? Because now I've increased my size of my position and it's turned around. So the one thing I believe in is just go in and buy it, right? Like don't put in limit orders. Just buy stops are fine, but limit orders, like usually you'll miss out. Like it happened to me. Like I tried to get cute and do a limit order on MicroStrategy a few weeks ago, and it was right when it was turning and went up $200-300 right over the course of like a few days. And so I kicked myself on that by doing something I always say I don't do. So, but that's also a very volatile stock, so that I was trying to get a little cute on it and get a bigger position a little bit lower down. But that's what happens in trading. So you can't fret about it, but it's just something to kind of think about as you start using some of these different techniques.
Yeah, and for sure. And when you're placing your orders, where are you usually putting your stops? Is it based on, the low of the day, low of the tight area, low, or is it just based on, a percentage, entry,
No,
exit?
yeah,
Yeah,
no, it's going to be based on some sort of technical area.
level. Hmm.
So low of the day, and and I don't really, if it's like some of the stocks that I'm doing, like I'm not doing like 10 cents because usually those will get hit. Like I'll put it like a dollar below maybe the low, or 75 cents or something. So I give it a little bit of room. Um, because some of these stocks that I'm doing are higher dollar amounts. So like 10 cents really doesn't do it. Even 75 cents sometimes doesn't do it. So, but it's usually like I'll try to find either like on the daily or on even like a 5-minute chart, depending on what I'm trading. Find something that makes sense where there would be a logical stop. And if it hits it, then yeah, I was wrong on it, and we'll wait again and try after a little bit.
Yeah, great. That answered my question. And sorry for going off topic to the slide, but just wanted to throw those in there.
No, those are good questions. I love those. But yeah, that's all I really had on the buying stocks. So, concentration, I think is also something that, I think to get big returns, you need to do that. And, I used to trade, I used to have like 10, 15 stocks in my portfolio. One would go up, the other one would go down. You never really see that big move in your account, just because there's just too much ebb and flow in each of these different stocks, and you just end up getting mediocre kind of returns on it. So concentration, I think, was one of the aha moments of what I learned to be successful. Selling stocks. Okay, so this is kind of where, kind of how I manage my risk. So like I said earlier, like I'll whatever my account values, I like have like a 1 to 1.5% risk of my account on any trade. Typically, it's going to be smaller, but like if I get lost 1 or 1.5% on 2, 3 trades all at once, like that would tell me like, hey, something's going on with your with the market, and B, even if I lost that, it'd be 4 or 5%. So it's not like it's not going to crush me too bad that that I'd be in big trouble. So that's kind of how I look at when I start trading. Like that's how I look at my risk. So any account that I'm trading, each account has its own, risk level. I try to get 3R or more on any trade. So if it's $100,000 account, I'm going to risk 1.5%. I want to try to get to at least 3% or $3,000 return on that trade or better. And so that's kind of the way I look at each of my trades and what I'm trying to do for the account. A lot of times, I mean, you might get, because my risk sometimes is pretty tight. Like I might get 8, 9 R right on a trade, and then in that situation, I'll try to sell half, and then just kind of move my stops up and keep it going, and see how much I can get out of it. Yeah, like I said, take profits, especially above your average R. If the stock's not doing what you expect or it's acting abnormal, just sell it. One of the biggest things I think that I had a problem with was that, oh my God, I'm going to sell it, then I can't buy it back. But obviously you can buy it right back. So if it turns around 2 minutes later, go back in and buy it. And I kind of like to think of it like jockeying for position. You're not going to get it right all the time the first time. And more often than not, you're not going to get it right the first time. So don't take it off your radar. Meta is kind of a good example. I've been kind of watching that, thinking it's going to break out. I bought it, sold it, bought it, sold it, bought it, sold it several times over the last, I'd say, 2 weeks, right? But I know when that thing gets going, it's gonna make up for the small little paper cuts that I've had trying to jockey around and position myself for that move if it moves, right? It may not, but it looks like it should move up. It's acting well, but that's kind of an example of what I mean by jockeying for position. Like it takes a few times sometimes for these things to get uh, out of their own way and actually break out. So you got to be aware of that. And then, like overall, if the market's extended, lighten up, just at least sell half or, don't put yourself in a position where you can get hurt real bad on your holdings if the market turns around the next day. So, I mean, those are kind of like in general the way I think about selling. And I typically don't sell. Sometimes I will sell everything at once, especially if I've got a really good profit. But typically, I kind of scale out on the sell side. If the stock is moving up, obviously if it's moving down, I'm trying to get out as fast as I can. But on the way up, I'll start to scale gradually, maybe 20% at a time or something like that, and try to capture as much upside of that stock move as I can.
And once you've got a little bit of profits, maybe it's already moved 1R for you. At that point, do you move your stop up to break even, or how do you kind of manage your your stop loss on the downside as a stock works for you?
Yeah, I mean, I think typically like I may do that. It just depends. Like 1R, like it depends on the stock too, like how volatile it is and how crazy things are in the market. Like typically I'm just going to leave my original stop where it was and just like let it go. And I don't want to tighten it up and then get stopped out just over a few things because I was willing to lose the money anyways on that and risk that amount. So, I'm really trying to get for, the 3R is kind of really what I'm going at. If it's a 2R, yeah, then I might consider, moving the stop up or even just selling it. But like I said, a lot of it depends on the market, where we are in the market. If it's
Right.
way extended, then yeah, I might just take that and call it a day. Or if it's a very volatile stock and I made 2R like in a few hours, then yeah, I'll just sell it and get out. So it just depends. There's no real clean cut answer to that, unfortunately.
Yes, so is trading. There's a lot of nuance that goes on, especially with different market environments and all that. So
Exactly. So you got to look at the whole thing, I think, in my opinion.
yeah, and before you jump in, maybe to start with, just kind of orient people, what moving averages you're using, what's your overall layout, just to kind of add that context.
All right, so let's go through some charts from last year that I traded. So like I said, I use TC2000, and just to kind of give you an idea, like I've just tried to simplify and keep everything super clean. Here's kind of like what I used to use in the past. Like I used to, my screens were just like super noisy and colors and everything, and I just kind of decided that it was too much for me. And so I kind of use a very simplified screen now. So I've got price, and if you notice, all my price bars are all green. I just feel like it's easier for me to see patterns this way. And actually, I learned this from Ryan Pierpoint.
Pierpont. Hmm.
Yeah, he does this. So I was like, this is brilliant. It's just so much easier to see things. So I use, just kind of the standard green bars, open, high, low, close, no candlesticks. And then I use three moving averages. I've got the 200 in white. I've got the yellow, which is 50. And then I've got this orange or this purple one, which is the 21 day. And then underneath here, I've just got volume, simple volume, and this shaded area is kind of the average volume. So if it's above that, I know it's volume was higher during that day.
So what do you have what do you have against candlesticks then? Why are you
I
team
used to use
bar?
candlesticks all the time. I used
Yeah,
to
I'm
use
just
them all
kidding.
the
I'm just
time.
kidding.
Yeah, always. I have nothing against them. I just find that this is a little easier for me to read, and I like the cleanliness of it.
For sure.
And I feel like I can see things a little bit easier on this than I can with candlesticks because they're a little wider and all that. So, but I will switch into candlesticks every now and then and take a look at a chart pattern. But typically, I just use these, open low. This doesn't even have open; it just has closes on them. And but so this has kind of helped me out a lot, I think. So that's really all I look at. I look at price and I look at volume and the moving averages, and that's it.
Yeah, perfect. Do you want to dive right in with RNA?
Yeah, So like the first few charts I did earlier in January. And so like, let me see if I can just show, maybe I'll try to do it so that we can just see December. So here was kind of the chart. I bought this back in January. To me, this kind of looked like a cup and, some sort of a very deep handle here. So I bought this stock based off of that. What I did was, I'm going to just zoom in a little bit more on this.
Mm-hmm.
So what I did was I looked at this, and this was kind of the handle. It had touched the bottom trend line on this handle. As soon as it crossed, this high of this bar,
Mm-hmm.
this is kind of where I bought it. And I bought 100% of my portfolio on this one because two things were happening. One is it crossed the high of this bar, and secondly, it was crossing this line that I had here for the top of the handle. And so I bought it. My stop was, below probably the low on this bar right here.
Mm-hmm.
And so I bought this, broke out, and I held it through this day here when it kind of went up. I was hoping it would continue up because this was a really strong bar that day.
Mm-hmm.
In terms of, it was kind of an engulfing bar to the positive side. It moved up a little bit the following day and then just turned around and didn't have a great close, and I sold it out here. So, I sold it. I think I made, like, when I talk about dollars, like, even if it was, I don't remember the exact, but like $5 on it. But I had 100% of my account in it. So for, let's see, 17 bars, like for pretty much the whole month, I held this position. And so I made a decent return. One of the things that really I think is important, that I think has helped me out, is that if you can have a good start to the year, and obviously this is probably very obvious, but if you get a good start to the year and you can get a little bit of a cushion in terms of, increasing your account, that just mentally, I think, helps you out so much. So I try to be very careful at the beginning of the year
Mm-hmm.
to make sure I don't put myself into a hole, because it's just tough then mentally, I think, for me to dig yourself out of that, and you just kind of have a little bit more pressure, like you're losing money already at the start of the year. And so one thing I think that can really help out is to be a little more conservative early in the year, to get your account balance up and you get a little bit of cushion, and then you can try to get a little bit more aggressive once the market is in your favor as well.
Yeah, great. And for this one, did you sell it all at once, or had you sold any prior
No, I
to
sold
that?
I sold it all at once.
Yep.
This was just like I bought it and I sold it. Like I was in margin in January, so I had a few other stocks that I had bought in addition to this. So, like, for example, this NetEase,
Mm-hmm.
I bought this stock in January. So when I talk about consolidations, like here was kind of like this move, you kind of consider it a flag even, I guess, but it had a decent move up here
Mm-hmm.
in a few weeks. It tightened up here, consolidated. You had a little bit of a shakeout here on this day, came back up, closed well, and then I bought it right here as it was like crossing this little consolidation or the top of the flag here. I bought it here and then I sold it like right here. So, this was one where I think I made, I don't know, like $6-7 on it. And mind you, the reason these, like, the trading account I had was fairly small account, not super small, but decently small. So $5-6 moves on what I was buying on this was a considerable amount in terms of dollars added to the account. So it doesn't seem like a lot, but it's kind of how I started the year out, was with these, smaller $5-6 moves.
Singles and doubles to work it up to the bigger trades.
Exactly. And as we kind of go through some of these, you'll see that my moves that I was getting were a little bit bigger because I had a little bit more capital to deploy towards some of these things. So I played a lot of small ball initially to kind of start to build the account up.
Yeah, great.
And then Lulu was another one that I got in January. This was kind of like one of those, the stock was just kind of in this sideways. It was very volatile. It was kind of going all over the place. I did end up buying it here on this day, which is January 9th.
Mm-hmm.
And the reason I bought this was, and it's zoom in on this a little bit. The reason I bought this was like, I was looking at this chart and I was like, well, this is like so volatile, but it's gotten crushed a few times, but it's bounced back. And this was kind of the low that I had overall. Like these were a little few shakeouts here, but it bounced right back into this kind of channel, if you will. And it just did this again, right? Like it came down and it came down hard. And this was, I kind of consider this a big cap stock, or not huge, but pretty big. But for this stock to go down from this price, I don't remember what the news was or what happened that day. It wasn't earnings, I know that. It fell $40, right? Like that's a huge move for something like this. So I watched this and it never got below this. And so I bought this stock. I don't remember exactly the price I bought it at, but I bought it somewhere like around here where I had like a small enough stop. It was like 2%, 3%, which I'm okay with doing that. I bought it there thinking that this, was kind of the crescendo. It was huge volume too, right? Like maybe the volume that's done selling. So I did buy it. And yeah, it did turn around and went up, and I sold it like pretty quickly because this was a pretty big dollar stock, and I think I had a lot of money invested in it. But it moved up, $25. I probably got like $18 of it or something like that, and sold out. So this was like a big win for me in January that really kind of helped my stock account value go up and kind of give me that cushion that I wanted. And so this was a really good trade for me that helped me out and gave me some confidence. And as you can see, is like, I traded this several more times, buying it at these lows. Like here, I bought it again as soon as it crossed this low here, because it looked like it had support right here at the low of 302.41-ish, 302-ish. And so I bought it as soon as it crossed this bar here.
Mm-hmm.
Yeah. Bought it there. And then, my stop was right below this support area here.
Mm-hmm.
And so, I held it for a day and a half, 2 days. I went to the top and I got out of it. So like, that's another like probably $8, $9, $10 move that I was able to capture on that. And then I did it again over here. It was kind of like, it didn't really come down to test this. So it stayed higher, which was probably a good sign, right? Like it's showing a little bit more strength. And I bought it again and then sold it up here. So like, so like this is an example of like, I know how the stock trades. I've been watching it. I felt comfortable with it, and I don't need to hold it, for a long time. I just needed to get that few dollars out of it and then just keep watching it. And if it's set up again for something that was like low risk for me, I'd buy it and hold it for a couple of days or however many days, get some dollars out of it and then get out.
And if one of these moves up, off of support, didn't really go right away, how much kind of leash or patience do you have with the stock? It hasn't hit your stop, but it hasn't really made, pushed higher yet. What's kind of your normal process with that? Will you just wait until it hits your stop, or, after a few days, it's not going, it's not acting quite right as you expected? Would you cut it kind of early?
Yeah, I probably would, or I might sell like, half of it and hold the other half or something. But yeah, like I want to see it move in in the first 2, 3, 4 days, probably.
Yep.
I don't want to hold it longer than that, because then something is probably not right, or you just don't know what's going to happen there. So why risk it? Because there's probably if it's a good market you're in, then there's probably something else that you should be focusing on versus waiting around for this.
Yeah, great. And it even if would you continue holding it even if you're down on the position on that first day? I know a lot of traders have that rule where if you're not green the first day, you don't have any cushion. They'll just kind of cut it, wait for it to set back up, or maybe look at it again the next day.
No, I don't. I don't give it like an hour or anything like that. And
Yep.
if it doesn't move, I'm out of it. If it's not moving, if it's going down, I'll sell it. But if it's not doing anything wrong, like I'll just I'll hold it and wait and see. Like I usually like to give it more than a few hours or a day, give it a few days to see what it'll do.
Yeah, perfect. And one more question for Lulu, and just in general as well.
Yeah.
Do you find you making more of your trades in the morning near the close, or it just kind of depends on when the stock makes its move?
Um, yeah, a little bit it depends on when it makes its move, but I do trade, if it's a good setup, if things are like looking good in the morning, I'll buy it in the morning. Or if the stock is doing well and it's closing real strong, maybe I'll buy it towards the end of the day.
Hmm.
I won't buy as big a position, but I'll buy some of it and then kind of watch it the next morning. And if it's continues to move, then I'll buy it. I'll buy a full position then.
Yeah,
So yeah, it
great.
kind of depends on the day. And but there's certain time periods where things are moving well. I always find like at Central, 9 o'clock Central, I find that, stocks make big moves in the morning, like everyone's after them for the first 15, 20 minutes, but then things kind of calm down and around, if you really want the stock, wait till like around 9 o'clock, first half hours or so. And you see it pull back a little bit. And that kind of tells you a lot whether the move is real or not.
Right.
Because if it doesn't keep going and turn around, quickly after like the first half hour, then you know that it was probably a fake move up. So that's also something that I do as well, especially if I want to buy the stock. It's moved up a lot in the first 15, 20 minutes. I just give it another 10, 15 and see kind of what it does. If it pulls back and turns around, then I'll jump in on it.
Yeah, great. No, I've noticed that same thing. And also one more question about your execution. Are you watching once you've got the stock set, you're focused on that, you're looking to execute, what time frame are you kind of watching in that moment? Or maybe are you watching multiple time frames at the same time?
Well, I'm looking at I'm making the decision that I want to buy it based on the daily or the
Yep.
weekly.
Hmm.
But then I'll drop down to a 5 minute to kind of see when to buy it. Like, because I use the 5 minute to kind of help me with my, like, especially if I'm going to put size on. If I go down to the 5 minute, then I can kind of take a look and see, like, okay, during the day, like if I buy it here, like I know it's pulled back a few times, but it's held this area, like maybe then I can just buy a lot of it and put a stop on a 5 minute chart. You can see it very clearly, right?
Yeah.
And put a stop there and say, okay, if it violates this, that means it hasn't violated it all day long on this 5 minute. If it violates it, probably probably not the right thing to do right now. So put a stop in. Maybe it's like a percent or something like that, or 50 cents or a dollar or whatever it is, right? Which isn't that huge, but my size is huge, and if I get it right, then I can zoom back out and then follow it, on the daily chart.
Yeah, perfect. Yeah, I think that's all the questions I had for Lulu.
Another stock here is Align Technology is also one that I traded, I think, in January. No, this was in early February. I traded this thing. Let's see. It was pulling back. Uh, it had a good, really, really solid run, which I didn't catch any of this. But I was watching it. I think this is their earnings came out. It started to pull back. And if you draw another trend line here, it was like kind of almost like a flag is kind of what I was thinking about it.
Hmm.
I bought it on this day, thinking it would turn back up and continue to go. It turned up, hit this trend line, and only made it up here. Started to come back down, and then I sold it on this the day that it started to come back down and didn't show any more strength in terms of moving back up. So got rid of it there. Waited, and this was on my radar. Came back down, and this trend line, it broke it on this day.
Hmm.
So I bought it as soon as it crossed the high of this previous bar. Held it, held it, held it. Didn't use my sell signals, my sell strategy on this. Kind of got greedy. Turned around. I should have sold it right here on this day, knowing that there's a big like naked bar, if you will, right? And obviously, it's not showing any power to go up. I should have sold it. Didn't do it. Held it, held it, held it, and I sold it finally on this day here. I was thinking this was gonna pull back and turn back around. Never made it. Another bad day. I should have probably closed it here. It didn't do it. And I finally got out of it over here as it cut the low of this one. And so I still made, I think, a little money, maybe broke even on it. But it's an example of like when you don't follow your rules and you try to get greedy. Like I should have probably done is sold half of it here and just followed my rule of, this is a pretty decent R here on this stock, like, $40. And I think, I should have just sold half. And this was like a good lesson for me in terms of, following your rules and not getting greedy.
Right. Right.
The next one I had here was Netflix. Now I traded Netflix a lot last year. It was like one of those stocks that was that did pretty well overall. It was one of the first movers, I think, when you take a look at the mega caps last year. It really kind of started the whole, at least for me and my portfolio, like was a major mover in April, end of April, early May. So I bought this a few times and played this, right. It was obviously in this downtrend starting in February, and it came down, and then the market wasn't doing all that great, so I kind of followed the market, but it broke out of this downtrend line, came back down, touched it, and then started to go back up, right. So like I bought it on this day here, as it touched and started to move back up. I bought it. I don't remember how many shares I bought, but anyways, it moved up. Second day, it made a really nice move, and I got out of it right here. And so I made, on this one, I made $27 on that move, right, in a day, or 2 days, I guess. But I kept it on my radar, and it made like this nice little bull flag here, and broke out. Didn't catch it on that one. Came up here, and then it's kind of consolidated again. And so it had a really bad close here at the bottom, went down, and then turned around that day. And as it started to turn back up, I probably was looking at this on the 5-minute to be able to find that it was turning back up and snapping back. And I bought it, on this day, probably somewhere around here after it came back up and recaptured this low. I held it for a few days, and I sold it on the way down as it broke down through this. And so on this trade, I made $21. And then my third buy was out here in July. So here, when I looked at it, it looked like it was just making a nice little cup and a little consolidation here, if you want to call it a handle. But it was pretty, for the move it made, it was still pretty well organized. It wasn't, too crazy in terms of volatility. And so it came down, it touched the 21-day, started to bounce off of it. And so I bought it here, and I held it for a few days. And, we had this big move here on July 18th. And after that move, I kind of sold it as it was moving up out of these bars, and made, another $18 on it. So just an example of like, I could have, I guess, held it all the way through and just, from here to here, and I would have made a lot more in terms of dollars, $141 versus, what I got out of it. But for me, and that's hindsight. Like, you just don't know. Like, these things could turn around and come slamming down, and you just never know. So I would prefer to take these little chunks of it along the way and have my risk management on it where I'm feeling comfortable that I can buy size on it. So that's just me. Someone else may be like, hey, I'll buy a lot less shares and just hold it for that full move. So it just depends on your style.
Yeah, for sure. And looks like 2 days later from that third sell, it may have been an earnings gap down. Do you have any rules related to earnings? I imagine being a swing trader, you're much more into selling to strength before, instead of just looking to hold through.
Yeah, I typically never hold over earnings. Like, even if I have, like, maybe if I have a cushion, I may just for fun, like, hold a little bit. Like, I'll sell most of it and hold, like, a few, very minor shares just for fun. But typically I'm I used to do that. I used to gamble a lot with earnings and just like, oh yeah, I think it's going to do well. I'm going to buy a bunch of shares and, get my head handed to me. So I've
You never
stopped
know.
doing that. Like there's no need to do it. Yeah, it's fun. Sometimes I'll do like, but I'll have such minuscule amount that it's not really going to hurt me anyway. So I do that. But also like Netflix is another example where I kind of played it a lot last year. These were just three of the trades that I had on it. But there was also another, let me show you another, like I did get burned on Netflix as well. So I'm going to kind of walk through that one right now. So it's right here. So, this thing was looking good. It made this big pullback and, made this little, kind of rounding cup and a little handle here. And so I bought some right here on this day, 6th of September. Obviously, the market wasn't doing all that great either at that time. It was, pulling back, but I bought some here. It looked like it had crossed over this kind of like this cup. I would say this was kind of to me like I was looking at it as resistance. Crossed it. I bought it. Didn't have a great close. It kind of just hung in there, and so I didn't really put a stop on this one. So this was like another one of those things where I broke a little bit of my rule, but I was watching it. And so, a few days go by, it kind of went down, came back up, and it was tightening up again. I thought like it's looking okay. This day was not good. It came down to the 50. I kind of held it because it was still over the 50. And then the next day, there was like the CFO was at some conference and basically said, hey, I know there's a lot of excitement around what we're doing and this ad tier that they're putting in place, and we're going to make all this money. Just to set expectations, it's not going to happen as fast as everyone thinks. It's going to take time. We're not seeing all the results yet, etc. So he mentioned this at the conference, and the stock immediately just tanked. And by the time I saw this was happening, I mean, I had gotten crushed already, right? So, and I had a decent size position. And so this was like one of my largest losses. And, when you looked at my equity curve and you're like, yeah, you had a pullback. This is one big reason why I had a big pullback on the equity curve, which really kind of hurt me psychologically and mentally. I think it hurt. Right. And it was also like a time when the market was not doing well. So you couldn't just bounce back. You had to like, it was a tough market during those 3 months. And so I had to sit through all that. And that's where you kind of need to like make sure mentally you try to like keep your mental capital positive as much as you can, because it can really impact your trading and then really cause havoc for you until you can kind of fix that.
Yeah, for sure. And like you said, it seemed like you traded Netflix quite a bit last year. Do you often find yourself kind of coming back to these names, quite a bit? I imagine Tesla might be the same way, a nice liquid name that can make really strong moves, throughout the year within bases, all of that.
Yep, exactly. And that's kind of what I do. Like that's kind of my approach. Like I said, I don't like to look for a lot of new. Like I'll look for new stocks, new things that are good. But I try to keep it to like a handful. Like my day-to-day list is this focus list, and these are the stocks I focus on. Like if you look at them, these are all like this is the ATR on these stocks, and so you can see like these are big ATR kind of stocks that can move a lot in a day. So those are the ones. These are the ones I focus on. I mean, I've traded these in and out a lot, and so I've got this list that I kind of add to all the time. These are my like, but there's like 80 stocks in this. So like when I scan during the week, I'll put them into this list. But this kind of just gives me a general idea of what's going on in the market, and I can look at this list, but it's not like my trading list, if you will, but this is like my trading list. And even within the trading list, I move these stocks around. Like, so for me, these like top 10, 15, like these are the ones I really am focused on right now.
Right.
For variety, whatever the reason is. But so I keep it very, very small, and I keep going back to the well, if you will.
For sure.
So yeah, so that was Netflix. I did trade. You mentioned Tesla. I did trade Tesla a little bit last year as well. This is one of the trades on Tesla that I did. This was kind of just a a little, it was in a downtrend, but it looked like it was trying to like set back up. It was like turning around here, tightened up, had a little very minor cup. I don't even, you can't even call it a cup. It was just kind of a little consolidation. I used this as resistance, this bar right here.
Mm-hmm.
And as soon as I crossed it, I bought some shares and ran it for a few days. If you notice, like it went up. This is another thing I notice a lot is like when a stock breaks out, like it'll more often than not come and test that breakout or that level again. And so, this is an area where you can add more if you want, and you've got a very, limited loss there that you can set in terms of risk. And it came back down. I held it, and then the next day it had a decent move, and I got out of it. So I made $11, on that little trade. I should have held it, obviously. It made a nice move from there, but so goes it, I guess.
That's hindsight.
Yeah. So then I wanted to kind of talk. I talked a little bit about like if the market's not doing well, I don't like to trade the stock necessarily, and I'll trade an ETF. So here's an example of last year when the market was, the market was in a correction. Like I said, I was out of the market from, like July 18th or something, the 20th or something, around here, I was out of the market. And when I got back home from vacation, I was watching kind of what was going on. I was watching it there, but I wasn't trading. What I noticed was this huge down day.
Mm-hmm.
And this is kind of like, you mentioned how do you use your indicators? So like I was looking at the indicators, the VIX was like, had spiked, I think, on this day. The bull, the bearishness was huge. The VIX was huge. The put call ratio was like super high. And so in this situation, this thing fell pretty substantially in the morning and then started to snap back. And so I bought a lot of T triple Qs and, was leveraged on those. And, as soon as this thing kind of, I bought it, I had a pretty decent sized stop, a tight stop on it. So I wasn't risking a lot, but held it overnight, opened up back into this channel. And, it was a little volatile, especially this drop, but I held it because it didn't hit my stop, which was, much lower. And it was a small stop. So I held it and it bounced right back up. And then I got rid of it on this day. So this was a pretty, it was like a $6-7, I think, return on it. I think it was $5 or $6. So, but I was really heavily, like my whole account plus margin was in it. So it was a very good, a good size return for me.
Yeah. How do you handle a big reversal day like that when you've got, a very sizable portion of your account? Because it seems like you like to play, that initial move up or that initial momentum move, but even during those initial moves, you can have a reversal day like that before it ultimately continues. So what's that kind of like psychologically, and how do you deal with that?
Yeah, it's first of all, I should have probably sold here because this was a telltale, like this hitting getting close to the 50-day, you would think would be, resistance, which it was. I should have probably sold it on this day and not even had to deal with this, downturn. Psychologically, you're kind of thinking about this, and you're like, oh shoot, like I should have sold it or sell it now. But for me, there was two things. One was this was my trend line,
Right.
And it held it.
Right.
Number two, I knew what my risk was down here, and so I was willing to deal with it. It wasn't a very large risk. So, and I don't remember exactly what was going on in the market at this time, but it was, obviously volatile. I don't know what the news was or what happened here, but I held it and then I got out of it once it went back up. Typically, I could have held it probably since I went over the 200-day, or the 50-day here. But I think based on what was going on here and the volatility, I just took the money and ran.
Yep.
So like in these situations, like especially like when you're looking at like the markets and like a big down day and a lot of volatility out there, and you're trying to play off of that, it's going to be volatile. But for me, it's like if I know my stop is so small, or it's limited risk. I know I've got like, a 1.5% account risk on it. Like I'm okay with that, to kind of play it, because I've seen this happen a lot of times, right? Right. And a lot of times when you see the volatility so high, it'll come smashing down, but come right back up. And if it doesn't go over the VIX doesn't go over what it was the few days before, then you kind of know like, okay, the volatility is starting to shrink. And
Right.
I don't remember if that's what I looked at here, but that was kind of what I do look at a lot when I'm trading these types of snapbacks, if you will, on the indexes.
Yeah, and for these type of snapbacks, are you often looking to sell in that 50 SMA area if your buy point's kind of under that at the bottom of a channel like this? I mean, that is like a key level that a lot of people are watching and potential resistance often. So
Yep, exactly. So that's where I should have sold it, but I didn't for whatever reason. I don't remember. But yeah, and this could have been one of those where the market opened up high at the 50, and then kind of hung around for a little bit and then just dropped the rest of the day. So that could have been what happened. And I was thinking it would turn around, but then by the time it happened, it was like too late.
right.
So that's the kind of I guess some of the risks that you do have to take with this. Either you just take the profit and run, because that was still a pretty decent move up here. Like it was $4, right? So I didn't make a lot more, but I took a lot more risk on it, unfortunately. But
Right.
ended up okay, which is not great.
Yep.
I mean, which
Great.
is good, but I should have sold it right here.
Mm-hmm.
But that's kind of how I use, and I played this again, not in my USIC account, but my other account. I played it again right here on this second time it came down, and then played it up here, and then got rid of it. I think it was over here.
Into the 50. Yeah.
So, all right, so that's kind of an example of that, and then here's an example of I think I mentioned like one of the things I like to try to do is find earnings plays, and earnings are always interesting time. So this was one where Avago came out with earnings, and during this time, like in early December, November timeframe, like the chip stocks were doing in general pretty well. Avago came out with really good earnings, from what I remember, and their stock just tanked. Like, not didn't tank, but it went down, right? Like, and I was like trying to figure out why it went down. I looked at the earnings reports, etc. The stock came down.
But it initially opened down that day.
Yeah, it opened down, and this was it. So this was a Friday, I think. They were at earnings on Thursday. Friday, it opened down. The earnings started up, opened down, came down, and then started to turn around, right? And so I bought this thing like as it crossed this. Actually, I think I bought it when it crossed the opening high. As soon as it crossed this, I bought it right here, and I think I draw. Yeah, I mean, if you look, there was like a trend line that was here as well. It's probably a little lower, right there. So I bought it as it was coming out of this after it crossed the high right here, and then just kind of held it and rode it up for a few days, and that ended up being really a good earnings. A lot of times, the market overreacts on earnings. And it gives you an opportunity to kind of catch that. And so like this was the thing, right? So like I caught it coming out of here. I held it for a good 4, 5, 6 days, but that was almost a 200-point move, right? Like I didn't have a ton of shares, but I had a decent amount of shares. And on my USIC account, like this was one of my other big trades that really kind of helped me, especially when you looked at my equity curve in December start to go up. This was one of the reasons why it went up, or that helped me out. So that's an example of an earnings play I'll look for. When the earnings don't look bad, the market just is expecting so much more. I mean, if you look at today with Salesforce, right?
Yep.
With CRM, same thing. They had good, decent earnings, and people were like not that happy with it. And it gave you an opportunity this morning to buy Salesforce. It was down like $2, $3, $4, I think, at one point. and it ended up closing up $10. So a pretty big reversal and a good move for a trade.
Yeah, I think another one today that was similar, CELH, I think initially moved
Yeah,
lower and then came really powerfully up through. I don't
that
know if you
was
want to
huge.
bring up that chart, but it was super strong.
Yeah, that was a huge move today on Celsius. Yeah, like look at that. So if you look at it on the 5 minute, right? Like I mean, this thing just it opened down here.
So volatile at the open. That's crazy.
Yeah,
Opening
I mean,
five.
I wasn't following this, so I didn't trade it, but I looked at it midday, I think, and I was just like, holy cow, what the heck happened here? But yeah, it opened here and shot up. And so like this was like one you could have bought. Like, I mean, yeah, you could have been aggressive and bought it here, but like if you look at the low of the day, it really wasn't near any major moving average. Like for you to buy this like at the open would have been pretty dangerous, I think.
Mhm.
But I think you could have caught still a lot of this move if you would have just waited. This was the high. And also like on a lot of these when it happens, like give it a few 15, 20 minutes. But like here, like this went up, came back down, and stopped. Like this is where you could have used like at 15 minutes or something, or even on this bar when it happened, you could have bought it here and use this as your stop, and you would have caught, like, even if you caught it here, you still made 7, $8 on it. So would have been a great trade.
Yeah, so you want to really look to play through the prior day's high here, maybe setting your stop below yesterday's low, something like
Yeah,
that.
yeah. That's another approach you could have used as well. But like, obviously this thing, like this was
It's a key level.
resistance.
Yeah.
Yeah, that
Yeah.
was a key level. So as soon as it broke this, you could have even done that and held it. So that would actually be a good one too. So that's still a decent, $10, $11 move.
For sure.
So all right, Palo Alto. This was also another great earnings play for me from last year. So just kidding. So these guys, even they came out with earnings last whenever it was in Q3 in November. Earnings were like they were fine. Like I was in software and software tech sales. So when they came out with their earnings, there was some issue around, like people were not happy with their growth or something. And customers were basically saying, hey, we're not going to buy it all right now for a 3-year deal. We're going to do a 1-year deal because interest rates are high. So like I've heard that story with customers. So I was like, okay, there's nothing wrong here. So, the stock fell quite a bit. It fell, let's see, it opened up $21 down, like almost
Hmm.
10%, 9%. And so I watched this morning and, you know, kind of use the same sort of approach on this one.
Yeah, this recently had another earnings drop and good recovery. Like all the cybersecurity stocks kind of fell together just
Yeah,
recently.
yeah, exactly. So, yeah, so I watched this thing. They came out with their earnings. People didn't like it. And so, it came slamming down. I looked at the 5 minute, like we looked at on the Avago, like waited till the 5 minute was crossed, bought it, and I bought quite a bit. This was another, really positive one for me in terms of return. I really loaded up on it for two reasons. One is I was using this as a stop here, like a low. It kind of came down and didn't even go below that low, and kind of like, to me, that's kind of a double bottom there,
Right.
looking at it. And so I felt very comfortable for two reasons. One is that I had a very tight stop. B, I kind of knew like their stuff was, their earnings were pretty good. There's nothing wrong with them. And when I saw the opening day high or the 5 minute high get taken out, um, that kind of told me that there's some demand for this thing. This thing is not going to keep going down. So I actually loaded the boat on this particular trade quite a bit. And so I held it for a few days. It kind of just stopped at this previous high, tried to break out, didn't do it, closed here. Next day here, it broke out and I added more to that position. So, I mean, this was like one of my largest positions last year. And then I just held this thing and then started to peel stuff off as it kind of consolidated here. And then I sold the rest of it over here. I probably sold this in like 4 or 5 chunks over the course of, let's see, 19 bars, 28 days. So the course of a month. So, I mean, this was a great mover. So the power of some of these earnings plays is pretty good with low risk. And so that's the key, right? And it has to make sense. So that's an example of Palo Alto. But actually, you know, I can talk a little bit about, like, I did the same thing here on this earnings gap. Like, obviously, the earnings were, I mean, it fell $100. That's ridiculous. And they didn't really say they weren't going to make any money or going out of business. So I kind of followed this. As soon as it broke out of this high of the second day is when I bought it. And I happened to catch it, and I sold out of it here the next day because this move was just a huge move. It was a almost $25 move, I think. So I made some good money on this as kind of an earnings play again. So I look for those when it makes sense. Not all of them do, but that's another example of an earnings play. It's a little bit faster typically, but I think the payoff can be very good on those.
Yeah, on these gap down ones, are you always waiting? Obviously, you didn't for the previous PANW, but here, it kind of showed with the next bar that it wasn't really trying to push lower, so it kind of formed a little bit of a range there against the moving average. Or you were watching
Yeah,
that level. Okay, gotcha,
yeah, like that would be the level right there,
gotcha.
right? So it undercut it, it popped back over it. As soon as it popped back over it, like that's when it popped back over. But I like looked for it right here after it
Gotcha.
crossed this high here, because obviously it tried to go move back up on day two and couldn't do it and ended up down at the bottom.
Hmm.
So your tell is that if it kind of goes over this bar that it couldn't get any higher, like that would make a logical sense to buy.
Yeah, perfect. Yeah, great. Maybe we should cover one more, maybe SMCI, and then maybe even a recent trade that you're taking a look at. I think that'd be good.
Yeah. Let's see, SMCI. This was kind of a wild child for me. This was kind of an example of where I kind of visited this one a few times and then caught it at the wrong time. And then just, this was another one where I kind of lost a little bit of money.
It was choppy in the space, so
Very, very
yeah.
choppy during this time. And, this is one where I had made a lot of money on it throughout the year. And so I was kind of revisiting it. It had come down. I thought it was, coming back around. This was an earnings gap down. But it looked like it was kind of trying to steady itself out, get back over to the 50-day average here. And so I bought it, and got knocked out the first right away, same day, right? Closed at the bottom. I tried to buy it again over here, jumping off the 21 day.
Hmm.
Didn't do it. And then I got stopped out down here. And then on half of it, and then I sold the rest of it after it like had this big gap and couldn't recover off of that. So sold the rest of it here. So this is another one where, kind of hurt my account balance in September. And that's the other thing I think is like when the market's doing well and you're just making money and you have to reverse course really quickly, and from a mindset perspective, I think that's real important. Like I still have a hard time doing that. Like you still got to work on that all the time. Is that when the market's turning around, you cannot have the same expectations in terms of returns as you did maybe even a week ago, right? So to move quickly to turn on that sort of mindset is critical, I think, to keeping your account balance intact, but also in terms of your mental capital as well, which plays a huge part in the whole trading game.
Yeah, and that mental switch is tough to do. And also, the flip side, we've been in a correction for a while, and it's time, to flip more aggressive. That's those switches. That's one of the hardest parts to figure
Yeah,
it out.
exactly. So yeah, so those are some of the trades that I did last year. I can talk about maybe something that I mentioned the monster trade or MicroStrategy trade that I missed, and that was back here.
Hmm.
When you look at it, I was looking to buy this. It looked like it was coming down. It was hitting this uptrending line, and I was looking at it during the day, and I saw that it had come down. I was trying to buy it closer to this downtrend line. I put in a limit order, didn't get filled that day. Next day it bounced, and this thing just like ripped,
Yeah.
for a few days. And so this is the stock I was talking about that I kind of still, totally missed. It would have been a big move, but because I put in a limit order, which was my fault, but that's the way it goes. But if you look at this stock right here, like, you bring this down, like this was just like it undercut just enough to shake people out
Right.
and bounce back into this support area, and then just rip higher. So this is one of those stocks where I do like to trade it every now and then, but definitely can't trade it with size.
It can, yeah, it's a volatile one for sure.
Yeah, so those are some examples of some things. I mentioned Meta as well. Like, I'm in Meta. Let's see, bought some Meta here. Obviously it had this great move. Bought some Meta here on this pullback, using this as kind of the low, as a stop, and kind of loaded up on it a little bit. Hasn't really moved. I sold a little bit, came back down, still didn't undercut it, so I'm still in it. Didn't hit my stop, but it's just been kind of like very volatile. So I did reduce size on this a little bit here. So I'm just at a okay size. I still think this thing can move up quite a bit. So I've been buying it a little bit, like as it, I tried to buy it here, turned around, came back in, gapped, bought it again as I thought it was going back up, got stopped out of this. And so, I think it closed pretty well today, which is, we'll see how this thing does tomorrow, but I like the way it closed. It closed at the high, all-time high. It closed like right at the top of this one. And we'll see what it does tomorrow, but I've got a pretty full-size position on this right now. I think if it crosses this, I'll add to it tomorrow, and see where it goes. But this is one that it's on my radar, and I'm pretty bullish on it. So, and I like the pattern. This is for the big move it made here of, $90 or whatever it was. It really hasn't corrected a lot, and it's acting very tight. It's very tight movements in the stock. And the if you look at the volume, it's just like gone down to nothing on here. So I really like the way this thing is acting.
Yeah, trading tight. If it broke, so now it's kind of formed for 5 days, a little bit of a range there. If it broke lower from that, would that be a tell for you to, hey, this needs more time? It hasn't really managed to push above the earnings gap high. It's time to let go a little bit more.
Yep. I think my stop on this is like right below this, like maybe
Makes
$1
sense.
or so below this low.
Gotcha.
And part of the reason I kind of held what I had today was that the market ended up pretty well towards the end of the day, right? It was pretty volatile in the morning, but it showed a lot of strength towards the end of the day, or midday onwards. And so that gives me a little bit of kind of confidence that if the market is good tomorrow, like this thing is going to go. But who knows? You always think that.
Yeah, we'll see what happens.
Always think positive.
Yep. Perfect. Well, I think it's always good, especially to go over trade examples, because that really conveys, I think, your process in a much more real way than just talking about it in words. So thank you very much for going through those trade examples. Yeah, perfect. And to go forward, I think it's a good summary to hear about people's challenges, what they're working on, because every trader goes through the same things, whether it's drawdowns, FOMO, which is your number one bullet there. What kind of challenges have you experienced, and what kind of resources would you recommend to kind of help with each of those?
Yeah. So I think I even mentioned, like, I have FOMO and greed, like I should have sold some things when I should have sold them. It made sense, and I was getting greedy on it. But FOMO is still, all these challenges I still work on. I haven't like conquered any one of these, right? Like, you're always just working on improving it every day. And so FOMO for me is a big thing. And one of the books that I read that kind of helped me with this was Trading in the Zone. And I think it was a little bit kind of eye-opening for me in terms of the way he positioned everything. And one of the best lines in there he said was that, the best thing in stock trading is the word next. There's always a stock out there, right? So you don't have to get every, bit of juice out of that stock to be successful, because there's another one that's right behind it. Just go find it, right? And so that's helped me in terms of how I think a little bit. And so to me, that was something that's really, really impacted my trading and helped me do a much better job of FOMO than I had in the past.
Mm-hmm.
Stops, I talked about this one already. Like this was something that I just had a mental hard time doing. And at one time I was even calling it instead of stops, like stops just makes it sound like you're out of it and you're not going to make any money, to call it a safety net instead of a stop. Mentally it kind of just helped me out. But, I think the biggest thing that helped me with the stops was that post-trade analysis I mentioned, cutting all your losses to 8% and see how you would perform, eye opener. And so that really helped me with stops. And I'm, do a much better job than I used to on that. Taking profits on the way up, thinking of managing your R's, what's your return versus your risk on a trade, and kind of going with your averages and taking your money on the way up versus, waiting and trying to, go too far. For me, the goal is not to get that big 20%, 30% return. I mean, I do get that, but typically my returns are smaller, but I'm just trying to get that little edge where I can consistently make that 15, 18, 20 bucks, 10 bucks a trade, and keep that rolling all the time. So that's kind of how I make my money. There was one thing that I used to be was really scared of strength. And I think we went through some of these where, the stock like Meta, for example, right? Like had a 90-point move. Typically I would have in the past just taken that off my radar, saying it's gone up too much and not really focus on it. But, don't be scared of strength, buy into strength and embrace it, right? And I think for me, that has come through experience, watching stocks with strength keep going. And, that's something that I think just takes time and experience and looking at charts and learning that, strength is a friend, not an enemy. So like go in and be confident, especially in a good market. Confidence, I think, was something else that I was always like double guessing myself on. Like in my gut, I'd be like, yeah, I think I should buy this because I think it's going to go up. It's set up, but I would never execute on it and move on it because I wasn't confident. And that's also something I think that just comes with experience. If you're scared to do it, just buy a little and prove yourself that you know what you're doing. And next time you'll buy the right amount and be successful at it. The other thing was inaction on the way down. I was always like, when a stock turned down, I was like a deer in headlights. Like, oh my God, it's going to come back, and I wouldn't move. And my gut was like, sell it, but I wouldn't do it. It was inaction. Mm-hmm. And I think the biggest thing that helped me with that is just kind of like, hey, I can sell it now. I can buy it back a minute later if it turns around. Like it doesn't hurt. Like at least I'm managing my risk and my downside by selling it now. And like I said, if it turns around, there's no law that says you can't buy it right back, right? It doesn't matter. And so just it's better to save yourself on the way down than not to make it on the way up, if you will.
Yeah, it protects your capital and, as you've said before, your mental capital as well, your psyche.
Exactly. So these have been my biggest challenges, I think, during my trading journey, and these are some of the things that I've tried to do to kind of overcome them.
Yeah, great.
Weekly, daily routines, real quick. Nothing earth-shattering on this, I don't think. Like I mentioned earlier, pre-market. I'm just looking at my indicators. I look at what's going on in the pre-market in terms of the stocks my focus stocks. See if anything looks interesting. Like, is it crossing like a particular resistance line? Is it crossing a downtrend line in pre-market? And if I see something that looks like it's doing something interesting, I'll, kind of move it to the top, and that'll be my focus for the open. And, that's kind of my pre-market routine. Post-market, I look at all my focus stocks or review the patterns, the charts, see how it did for the day. I'll maybe sometimes go down into like into the hourly or 30-minute chart for the day on the stock, just to kind of see how it moves, so I get a feel for it in case I do end up buying it at some point. And then I kind of just plan for tomorrow, like what's going on, like do I have room to buy anything else, or should I be taking off some money, some risk, and then review updates from the services that I follow. So like I mentioned, I follow Minervini and chart pattern and all that. So, I'll kind of go through some of their platforms and see what's going on there, and kind of keep myself updated with that. Weekly, I do my scanning on Saturdays through MarketSmith, and I read IBD. Sundays, I listen to, like I mentioned, the Minervini update, where he kind of gives a overall update of the market and kind of where things stand. I find that very helpful. Then once again, I'll start looking at the charts for my focus list, any new stocks that I've found during my screening, and then review my accounts and holdings and what I have, and kind of just plan out for the week what I want to do and kind of how I want to position myself for the upcoming week. And then monthly, what I do is I review all my results. So I've got a spreadsheet where I go through and I download all my trades for the month. I'll go through and I'll find out what were the big winners, what were the big losers. I'll take the big winners, top 5 winners, top 5 losers. I'll go back, chart them up, and kind of where I bought them, where I sold them, try to see why I did what I did, and see if I can learn from that for moving forward and continuing to trade better.
Yeah, great. And I think a big thing is just to have routines like this, having a consistency in doing them. That's going to help build your intuition about what's going on in the market and all of that. So yeah, I think this is a great template for traders watching this to learn from and try some of it, see if you want to add anything else, and find something that works for you.
Yeah, I think the key is the monthly results. Like, I track how much I made in each account, dollar wise, my highest winning, one, the lowest, biggest loser, biggest winners, and just track that every month. And so, kind of where you're at in terms of making money.
Yeah, perfect.
And I'd say the biggest takeaways, like from the contest last year, for me, were that risk management is, and not just from the contest, but just in general, like also it's like risk management is key, right? Like, that is kind of the holy grail of trading, is like managing your risk, right? It's not the making money, it's not losing the money. And that was something I struggled with for many, many, many years. Like I said, I figured out I knew how to make money, but I wasn't good at keeping the money. And so risk management is absolutely the number one thing that you need to focus on if you're a new trader. The other thing was also, don't put undue pressure on yourself to make money. Even if the market is not cooperating, even if it is cooperating, don't put pressure on yourself that you got to make a certain amount of money. One of the things I used to think about all the time when I got into trading was like, oh, if I can make, $2,000 every month, like, yeah, that's what I'm going to go for. And the reality is that once you start thinking like that, you put undue pressure to make that money, and you end up losing a lot more. The market's going to give when it's going to give. You can't control that. You got to be on the watch for that. Like, when is it going to be giving? And you got to try to make as much money during the times it's giving, and make sure you close it off as quickly as you can. When it's not giving, and don't let your money out of your hands at all. Like, one of the things that people say is, oh, it's the house's money. Like, that's the worst way to think about your money. If it's in your account, it's your money. It's not the house's money. So don't think like that. Don't try to make money too quickly is the other thing. Like, that was something that I used to think about, was like, oh, how quickly can I make like a big chunk of money right away? Obviously you'll have big wins, but it's not about making like a ton of money. It's about getting consistent with something you can do and do that over and over, right? It's a marathon, not a sprint, which people hear all the time, I think. I think the other thing is, have confidence in your skills and ability. Think positive, follow your process, and not your account balance. I think I mentioned that earlier. Like, that was a big kind of a aha moment for me as well. Like, especially in the contest, like when I said, like in fall last year, I was losing money. It was like I started to focus on my account balance versus the stocks. And, I'd look at the stock like a week later, or 5 days later, 4 days later, and the stock would be up like huge. And had I held, I would have made money, but I got too focused on my percentages and my account balance that I didn't focus on the stock, and that kind of hurt me. Let your winners ride longer than you think. Sometimes that's a good way to think about things. There are a bunch of stocks I think I went through that, I had sold them, but had I held them, I could have probably gotten some more out of it. The stocks didn't do anything wrong. So that's another kind of thing to think about as you start to, especially if the stocks are doing well and they're set up properly, like you should probably just hold them a little bit longer. The other thing is don't get distracted by CNBC or others. I used to follow CNBC and like listen to what some of their guests were saying and like, oh shoot, I should do this or I should do that. I know a lot of folks try to follow others. I try to create my own stocks to trade and the reasons to trade it and trade those and not let the noise get in the way, because that can distract you from your strategy and what you are intending to do. So keep your focus on your strategy and your approach, and don't let the outside noise, distract you from that. And then the last thing, is believe in yourself, right? Like, I mean, you got to believe that you can be successful and get triple digit returns or do better than the market or whatever your goals are, right? And then go figure out how to do it. And you can do it. Like, everyone can do it. If I could do it, it took me a long time to get there, but I'm still learning. But, I've been successful for the past few years, and don't ever give up.
Yeah, these are key. So for the last point, as you kind of mentioned, if we were all sitting in the room, everybody watching this right now, and we asked a question, do you think you can get triple digit returns in the next 6 months to a year? You guys should all be raising your hands. So get to that point, everybody. Believe in your abilities. Perfect. Thank you so much for your time. I really enjoyed it. Congratulations again on your performance last year in the contest. Excellent work. Do you have any kind of closing points outside of, these key takeaways that you want to leave everybody with today? If they ask you, what can I do to perform better, make it as a trader?
Yeah, I mean, I'm open to, answer any questions anyone has. I'm on Twitter as well, or X, D Uppal 75. Feel free to reach out to me. But, this is kind of a big, it's not an easy endeavor. But it's a success. It can be a very successful endeavor that can change your life. Ask questions, learn, study, and I think everyone can do it if you have the right mindset around it.
Yeah, great. So we'll have your Twitter linked below. Is that the best place for people to reach out if they want to get in contact? Okay.
Yeah, for sure.
Yeah, perfect. Well, Deepak, thank you again for walking through your trading, your process, and your presentation. Definitely appreciate it. I think everybody who's watching did as well. If you did enjoy, please go ahead and leave a like down below. Subscribe if you're new to the channel. Feel free to leave any questions down below in the comments, and we'll try to get those answered there for you. So thank you guys so much for tuning in, and we'll see you guys in future videos. Take care.